The government is shutting down? It could be massive news for Oscar Health. What's up, guys? In this video, we're going to be talking about how the government is potentially going to shut down tonight. Yep, closing up shop. The government will completely shut down. And if this is your first rodeo, that could be a little scary. You could be sitting there thinking, wow, the government's shutting down. What could that actually mean? We're going to be talking about that in this video today. We're also going to be talking about the implications that this can have on the stock market today. And then finally, we're going to be talking about how this could actually be great for us Oscar investors. If you're invested in Oscar Health, you're definitely going to want to stick around to the end of this video because I'm going to talk to you, one, about what the charts are telling us, but two, how this could be absolutely massive for Oscar Health going forward. And it could be actually a very big deal and cause the stock to have a momentous move upward in a very short amount of time. So we're going to get into all of that. And like I said, we're going to first talk about what is going on with this government shutdown. So over here, we can see that we're headed to a shutdown, Vance says, after Trump meeting with leaders ends. So Vice President JD Vance is basically saying, yep, we're going to shut down. We're going to shut down because the meeting that they had at 3 p.m. today, Eastern, did not go very well with the Democrats. And we're not going to get political here. Honestly, politics are honestly kind of dumb, anyways. So we're definitely not going to get political here. But really, all we're going to talk about is just the facts and what's actually going on. So clearly, the Democrats and the Republicans could not meet and come to a deal to extend the government shutdown from not happening. And, clearly, we're going into a government shutdown. And again, if you don't know what that means, and this is like your first time ever experiencing something like this, I'll just be honest. The fears of a government shutdown happen pretty much every single year. For me personally, I was in the Air Force for a decent amount of time, and I went through every single year. It seemed like everybody was freaking out about, oh my god, the government's going to shut down. We're federal employees. We're not going to get paid. How long is this going to be? And everybody kept freaking out. And in the beginning of my career, I really was like, oh man, what does this mean for me? Am I not going to get paid? This is crazy. I have to get paid. I have to provide for my family. And then towards, a couple years later, and then towards the end of my career, it really became, oh, the government's going to shut down. Okay. Yeah. Okay. Sure it is. And then even when it did happen, like I think two times while I was in, it lasted a week, couple weeks, and then that was it. So typically, even if it does happen, a government shutdown does happen, it ends pretty quickly. Okay. And what this really means for the grand scheme of things, not much. When you're talking about investing, it doesn't mean much. When you're talking about trading, it does mean more than meets the eye. Because if we are in trades, right? If we're in trades and the government shuts down, we could see some regression in stock prices. And this could be that catalyst that we've all been kind of waiting on. The catalyst sitting there saying, hey, it's time for a pullback. So this could be the catalyst for that. If you're an investor, this honestly means nothing and it's just another day. And maybe this gives you a nice dip buying opportunity for your favorite stocks, for your basket of stocks that you really are looking to, load more up on, dollar cost average into. It could be a good buying opportunity there. But honestly, I don't think much of this and I don't believe much will come from it. But I do believe that this will have huge implications for Oscar Health. And we're going to get into why right now. Here we go. We have very large differences, Schumer said after the meeting, but he added that he believes Trump heard Democrats' objections for the first time, suggesting the face to face was at least partially constructive, which is good. That means, there's some kind of common ground here, and it could lead to an opportunity for them to come and see eye to eye and get this thing worked out. Now, why is the government shutting down? Well, mainly the government is going to shut down because they need to pass a funding bill to make sure everybody's getting paid and to basically make sure the government keeps going, right? They need paid. employees need paid, just like any business, and they need to basically extend that, find more money, and inject that into the government to basically keep it going, and agree on a funding bill for this next fiscal year coming up, which 1 October, if you've been in the military or something like that, you understand 1 October is the start of the new fiscal year. January 1st might be the start of the new year, but October 1st for a lot of businesses and especially the government is the start of the new fiscal year. Now, with the start of the new fiscal year, you need a whole new budget, right? You need a whole new how much money we're going to spend, blah, 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 right? So that's really why it's shutting down, because the Republicans and Democrats can't come to terms in Congress and agree on what that funding bill, what that bill is going to be for the next fiscal year. And what are the key points, right? And I promise I'm getting to the whole Oscar thing, guys. The key points of this whole Republicans versus Democrats. Obviously, the Republicans are mainly in charge of Congress right now, so of course they just want to get this over with, and they want to get a deal. But the Democrats are sitting there saying, "Well, you can't get a deal, and the government will shut down unless we sign off on whatever you guys are proposing." Now, the Democrats basically lost big whenever it came to the big beautiful bill. They didn't really get a lot of the things that they wanted in the bill, and it was mainly driven by the Republicans and what they wanted in the bill. And in that bill, you had some distinct things: Medicare and ACA subsidies and Obamacare basically are being, stripped away, and they're not getting like ACA subsidies especially it's set to expire at the end of this year, and that really helps the lower income households get affordable. It's the ACA Affordable Care Act helps them with the subsidies, helps them get uh, health insurance for them and their families. So being able to get that health insurance for them and their families is very, very important. And with these ACA subsidies, basically, if they don't get extended before the end of the year, you're going to have millions, tens of millions of Americans lose their health insurance, become then uninsured, which is terrible, right? If anything bad happens, if they have to go to get an MRI, have to go to the emergency room, they're going to be coming straight out of pocket for that. And if they can't pay that, guess what? It's going straight to debt. If they can't pay that debt, then it's going to go straight to collections, and then they're going to be called to by collectors to pay that bill, and it's going to damage their credit. And you see it just has this ripple effect. So tens of millions of people are not only just going to lose their health care, but premiums on healthcare are going to get jacked up like crazy. Like crazy. Premiums are going to fly off the handles. We're talking about hundreds of dollars added in premium a month. Sitting here talking to you right now, if you look to your bills, how much how annoying would it be if I told you, "Hey, next month for your health insurance, you're gonna have to pay a couple extra $100, $500, or an extra $1,000 a month." You're gonna sit there and be like, "What? Ronnie, I can't believe I gotta pay that much more money." Yeah, I know. It's gonna suck. It's gonna suck for a lot of people. And so, what do we have here? And again, I'm getting to the whole Oscar thing here. If you already are an Oscar bull, you already know where I'm going with this. So, what we have is the Democrats really pushing. Let me talk to you. Let me talk. Let me zoom in on for you. The Democrats are really pushing for like few key things. They're pushing for Obamacare to get extended. They're looking for ACA subsidies to get extended, and they're looking for better health care and those benefits to get extended, which a lot of stuff has gotten stripped away in the big beautiful bill. And the Republicans are sitting there, and they're not all against it, but the bigger heads are against it because they are the ones wanting to strip it away and get rid of Obamacare completely. But here's why some amount of Republicans are actually for getting this extended, because 60% of the people that are using ACA subsidies and that benefit from ACA subsidies, come here, guess what, are Republicans. 60% of people that are using ACA subsidies are Republicans, not Democrats. So what does that mean? That means that you have a product that you're going to let expire at the end of this year, And when it expires, it is going to directly impact more Republicans than it is Democrats. But you have the Democrats pushing very hard to get it extended, while only some Republicans are for it getting extended. Now, what else do we have coming up soon? We have midterm elections. And this is where it all comes together. If ACA subsidies are not extended, if some of the Affordable Care Act and Obamacare items are not placed or not extended or not put back into a bill or not put in the budgeting act or not the act, the budgeting bill, the budgeting plan, if they're not put in there, then you're going to have a ton of mad people where their premiums are getting jacked up, they're losing healthcare altogether, out of healthcare, or they're paying more, a lot more. And I just told you that majority of them are going to be Republicans. So how do you think that affects the midterms? You cannot sit here and tell me that if that happens, Republicans are going to get more votes. They're not going to get more votes for midterms. They're going to get less votes. And if they get less votes for midterms, it could cause some Republicans to lose their seat. It's very hard to get a seat in Congress, obviously, or Senate. So obviously, if they lose their seat, they're going to be very unhappy. So you kind of see where we're going with this. If we get ACA subsidies extended, we get enough votes on the Democrat side, then they all come together and they will pass ACA subsidies. And there's one specific company, and we're finally here, folks. We're finally here to what I've been gearing up for. There's one specific company that if ACA subsidies get extended, and it's a company I've been bullish on for such a long time now. It's a company that has, been in this range of $12 to almost $20 per share for almost 2 years. Yes, that's right, folks. I'm talking about Oscar Health. Oscar Health, with over 2 million users, in a company that is trying to disrupt the health insurance sector. They mainly thrive off of ACA subsidies. Now, they're going to be just fine after ACA subsidies if they don't get extended. They've already planned for next year and they already have other growth revenues and avenues. But if ACA subsidies get extended, then they have all of that and the cherry on top, right? Everybody likes a sundae, but you love the cherry on top. I start off with the cherry. I'm like, yep, give me that cherry. I'm going to eat that cherry real quick, right? And then I'm going to dig into this sundae. That is what we were talking about. That cherry on top is ACA subsidies getting extended. If ACA subsidies get extended, y'all, oh my goodness, you could see a 20% plus move in a very, very short amount of time, in overnight session or tomorrow. You could see it in such a short amount of time with Oscar. And stick with me. We're going to get into my valuations on Oscar through my high five snapshot, and we're going to talk about that as well. And then we're going to talk about the chart. Stick with me. And if you made it this far in this video, how far are we in? We're 13 minutes in. If you made it this far in this video, why not just smack that like button? Smack that like button. Hit the subscribe if you're not already here, because clearly you made it 13 minutes with me. So clearly you like what I'm talking about. And if that's the case, I'm a small guy. Help me out. Subscribe. Let's help each other out. I'll keep on putting out content for you guys. All you got to do, hit the like button. It's free. Hit the subscribe button. It's free. And if you want to take your investing or trading game out to another level, you can join the High Five Collective. We're talking about this right here, High Five Collective. That's my Discord. That's my WAP. That's where I do my trades, my trade alerts. That's where I go over my investments, my gems. Companies like Oscar, Zeta, D-Local. Great companies. Sub $10 billion market cap companies that are geared and ready for the long term. We're finding those monthly. We're finding multiple of those monthly. We're posting these snapshots. We're doing all this work to help you do less work and find great companies to invest in, find great trades. And we got a 5-day free trial right now if you want it too, on investing or trading. So you can come in, try for 5 days. If you don't like it, you can leave. All good. Okay, let's get back into this, guys. So what did we talk about in this video so far? We talked about the government potentially not, it's not done yet, but JD Vance, some others saying it's going to shut down. Then we talked about kind of why it's going to shut down, because of the budgeting plan not happening and the two sides not meeting and agreeing on a budgeting plan. And we talked about the Republicans obviously won it. And then we talked about how the Democrats, why they're really not giving a nod, a yes vote to ACA subsidies getting extended. Mainly, the main things are Obamacare, ACA subsidies. Those need to get extended or things put back in there so millions of people don't lose healthcare and they can go home with a win. And everybody wants a win, guys. Everybody wants a win. You want to win when you go play a sport or when you play a video game or when you're investing in a stock or trading a stock. You want to win. You don't go into something wanting to lose. You either win or you win a little less, meaning you come to an agreement. Both sides come to agreement. They didn't lose per se, but they found common ground and they both won just a little bit less than what they initially wanted to. So, guys, the whole government shutdown, it could happen, and then tomorrow it could get fully reversed. That's the thing. Once the government shut down, they really start amping up those talks and really trying to figure it out because the government or the American people don't like the government being shut down. Okay, so the talks get amplified, and then we can really see a resolution to this whole thing very quickly. And again, that is why I believe with the ACA subsidies, it's something where the Democrats really want it, and they want it before they give the go ahead to extend the government staying open or the budget bill. And then there's some Republicans that really want it too. So this is a recipe for success with ACA subsidies getting extended in a company like Oscar, which I am invested in for the long haul, right? This isn't some like, short term thing. It's something that I'm invested in for 3, 5, 10 years from now. But and I've went over my investment thesis on this multiple times through other videos. I've done live reactions to interviews with Mark Bertolini, the CEO. If you want to check any of those out, they're all on my page. You can go on there, just type in Oscar, search for that, and you'll find all the videos, all the DD I've done. I post a ton of DD due diligence and everything on X as well at the Ronnie V Show. If you want to follow me there. But yeah, guys, I like if you're gonna ask me, Ronnie, what do you think's gonna happen? I think ACA subsidies are gonna get extended. I think they're gonna come together, find a middle ground because the government's only been shut down, I think, 2 or 3 times. Don't quote me on that. I believe only 2 or 3 times in the last like 10 or 20 years. They've actually let it shut down 2 or 3 times. So it's not often that they actually let it shut down. So I believe, you know, even if it shuts down, I believe they come to a quick conclusion, and I don't think we see a month of it shut down because we haven't seen that. I've never seen that. So I think it was 3 weeks was the longest, and I was in the Air Force, like I said, and everybody was freaking out, like, "Oh my gosh, I'm not getting paid right now," and the civilian workers weren't working at all because they weren't getting paid. But we're in the military; we were still working because, well, you're in the military. You're it doesn't matter if you're not going to get paid or you do get paid. You're in the military, so you're going to work. But obviously, the government shutdown ended, and then we ended up getting paid again. So I was like, okay, I got all my money still. But yeah, I do believe that they will come to a conclusion, and I think ACA subsidies will find a way to get extended for at least this next year. Beyond that, I don't know, but honestly, it just needs extended 1 year. I would really like that as an Oscar Bull to see it get extended 1 year because that's going to give Oscar a lot more time to grow in other areas like ICRA and ACA and basically get to a better position financially to where they can continue this push to disrupt this section in this area. But let's go into the high five snapshot. So here we got Oscar, guys, and you can quickly see why I'm so in love with this company, right? Just based off the technicals, guys. And then just to give you a quick little snippet, Oscar Health cloud-based Oscar Plus platform enhances members' experience by offering healthcare providers engaging tools and analytics, while the campaign builder improves care management and interactions. This company is also partnered with OpenAI, and they're partnered to they just have a lot of AI integrations, which is constantly driving down SG&A, constantly driving down SG&A revenues. As you see, they're going to hit 12 billion. This 11.18 billion for 2026 is only because ACA subsidies are fixed to expire at the end of this year. I'm telling you this right now. If ACA subsidies don't expire and they get an extension here, like we were just talking about, you're going to see 12 billion for this year in revenue. Then next year, you're probably going to see this 14, 13 or 14 billion here. And then, you can just kind of move all these, you just kind of move all these to the left. So we'd be talking about 12 to 14 to 15 by 2027, then to 18.6 to 2028, then 20 by 2029. And then we're talking about probably 22, 24 billion dollars in 2030. And then we're talking about 500 million in free cash flow, and you're talking about 700 million. You see what I'm saying here? We're talking about massive free cash flow running like crazy, guys. And then here you're talking about, negative $1.38 on EPS this year, and that's mainly because medical loss ratio is just completely spiked this year, which I do believe that they're going to come back down to the mean, to the average with medical loss ratios. And Oscar Health is pricing premiums next year for current medical loss ratios, which are about across all the companies, about 86, 87, all the way up to 90, all the way up to 90, guys. So pricing up there. And then if we see a reversion in medical loss ratios, we're going to see massive EPS growth, not 50 cents. We're going to see a giant leap to $1 or more if you have premiums being priced here, and then you have medical loss, because medical loss ratios are here. If medical loss ratios come down to here or even here, you are going to have this massive EPS growth year over year. And if you get ACA subsidies on top of all that, you are going to see even larger EPS growth, because now you won't have a dip in revenue. You'll have an acceleration in revenue. And by the way, for 2025, they are going to be doing 30 to 32% revenue growth. Yeah, this is a health insurance company that's doing 30% revenue growth. Now, again, next year, they're going to see a dip unless ACA subsidies are not extended. If they are extended, sorry, if they are extended, then you are going to see that 30% probably continue, or at least 20% plus continue for Oscar Health over at least the next 3 to 5 years, I believe. Now, what are these numbers? This is the discounted cash flow model. This is the intrinsic value for the discounted cash flow. This is the EPS fair value. We're talking about $42 and $25. This is a sub $20 stock today. Sub $20 stock today. So you have a double up based on this, and you have a, basically gaining $6, $6 per share, or 30-40% margin of safety from where we are at right now. Just massive opportunity in this name, guys. And yeah, again, we're talking about a health insurance company here with massive growth. They are using AI. They are on Amazon Web Services, which these other giant Goliaths like UNH and CVS, they are not on Amazon Web Services. They're not producing on the new age of technology. They're still on broadband, guys. So if we look here at our bubbles, basically you have health at a 5, you have growth here at a you have growth here at about a 7, values at a 7, technicals is at a 4, and moat is at a 2. Now the moat's at a 2, guys, because you have Goliath in this area, and this is a disruptor. Disruptors are not usually classified as moats, right? If you're disrupting something, you're disrupting a moat. Okay. So, and then you get your little gem here, because this is a high five gem. What is a high five gem? A high five gem is a sub $10 billion market cap, which I believe has 5x potential return on your investment or more. So we're talking about 500% return on your investment in the next 2 to 5 years or more. Okay. So that's Oscar Health. Those are that's the quick snapshot, one sheet, all you need. I post all of these in my community as well. You can clearly see we have a ton of them. And we are continuously adding more and more and more of these high five snapshots. And we have our high five levels, which tell you, they take the guesswork out of it. They tell you exactly where you should be, phase 1, buying your biggest position, phase 2, dollar cost averaging, and then phase 3 is where you're going to be trimming. You're going to be trimming out of your positions only up to 50%. That's the whole investing framework that I teach in the High Five Collective. Again, if you want access to that, I will I will put the link in the bio below. And again, guys, if you're still here, we're 25 minutes strong. What's up? Thanks for still being here for 25 minutes. I really appreciate it. Again, do me a favor, hit that like, hit the subscribe button if you want to see more content like this, guys. It's absolutely free. You don't have to pay anything to continue to see my content. So we come to what is the high five algo. This is a brand new product that I created that basically takes all my strategies, my old and my new strategies, and combines them into this powerful, very, very powerful high five algo. And I know what you're saying. High five algo, very powerful. You're going to tell me it's a money printer. You're going to tell me that you can make tons and tons of money off of it. Sure, you can. But I'll also tell you it's not perfect. Nothing's perfect. Nothing's going to consistently make you a bajillion dollars. Okay. Nothing. And I'm not here to sit here and sell you on this. Just kind of giving you some background of this new product that I did make that will be coming available soon. That does work very, very well. It works extremely well when we go up to a monthly chart. When we go up to a monthly chart here, guys, we can pull up the strategy test. This is on TradingView. We have a 100% win rate, 100% win rate on the high five algo, which is these histograms right here. You can see that we had a sell here, and then we had a buy, and then we held until we had this red plus, then we sold, then we had another buy, a sell, and then just now for this month of September, it's about to end, we have a new buy alert. So if I told you that this little algo right here that I created had a 100% profitability rate, and we are just right now for September getting a new buy rating, a new buy rating. And this has a 100% win rate on its last 3 trades, and it's only 3 trades. You'd be like me and sitting there like, well, I already love this company. I already love its fundamentals. Now you're telling me this algorithm and the strategy you have has a 100% win rate, and we just got a fresh new buy alert. We just got a fresh new buy alert on Oscar, guys. We just got a fresh new buy alert on Oscar. And this time, after all this consolidation, after 2 years of consolidation, we could finally be seeing a massive move in this name, which just kind of just also carries over into why I believe an ACA subsidies extension is going to be made. Because we've been in this consolidation period and something has to be the match that lights the fuse. Something has to be the match that lights the fuse to the rocket that goes. Okay. The ACA subsidies could be it. It could not, but it's just kind of lining up, guys. High five algo, we're getting a buy alert. The high five flow here, you can see what's happening. There's a monthly chart. It was doing great. It ran a lot. And then we kind of, died down a little bit. And then kind of been here in the negative volume area with the flow. But now, September, it's starting to tick back up. Typically, when you get red to green on the flow, very, very bullish. Very, very bullish. That's saying like, okay, all the selling volume, this was the peak selling volume here in May. And then we've been slowly creeping up, less and less sellers, more and more buyers. And then now we're getting the flip. And you see what happens once we get the flip. You usually get continuation higher and higher and higher. And then if we go to our last one, our last indicator that complements the high five algo suite, we're talking about this red and green line, guys. Obviously, they IPO'd back here, excuse me, in 2021. And then since then, they just went down and down and down and down. We had a bear market in there, down and down and down. And then, we flipped the green, then flipped the red, then flipped the green and been green, and then holding this line. And now, like I said, now we are sitting here still holding this green line. We have the buy alert, we have the algo buy alert, and we have the high five flow that's about to give us a buy alert as well. Furthermore, you have this massive volume shelf because you've just been in this range. Like I was talking about earlier, you've just been in this range for almost 2 years. This is called stage 1. In stage 1, you build this beautiful base with all this support and resistance, and then you are looking to break out of this right here. This is L resistance. If you can break out basically over 22 to $24 here, then you'll most likely come back and retest that to flip it to support, and then you're going to go. Okay. and then you're going to go into the 30s, essentially. And that's what we're really looking for here. We're looking for that break of this resistance on a technical standpoint. And again, this is a long-term hold for me. This isn't a trade for me right now. I'm not in this as a trade right now. If we close this monthly, I might get into some trading shares as well. But as of right now, it's just a long-term investment for me. And I'm really excited about ACA subsidies getting extended. And I believe it can happen. I believe there's a strong probability that it happens. Is it 100%? No, nothing's ever 100%. Is this 100% that we got this buy alert and now we're going to shoot to the moon? No, nothing's ever 100%. And I'll never say that. But the probabilities are on our side. Again, we're 3 for 3 over the last 2 years. Well, actually, we're 3 for 3 since 2021. And basically, this is saying, hey, you know, this, you know, we basically landed on black 3 times in a row. And you're coming to the casino, you're coming to the table, and you're probably going to say, okay, I'm going to put my money on black because we've already hit 3 times in a row. And I think we're going to hit there again. That's people's mentality. That's kind of where we're at now. Not gambling, but this just helps with that, scenario that, hey, we have great fundamentals here. And the technicals are actually backing the fundamentals. So you have technicals and fundamentals on the same side. You have it all on the same side. So yeah, it's looking like a strong move is imminent in Oscar. Either way, I'll be holding this name. Even if we get a big move down because ACA subsidies don't get extended, I'll probably be looking to buy more, honestly. So that's what I got for you guys today. Just talking a little bit about the government shutdown stuff. Most of you guys know what all that is and how all that works for the most part. But for anybody that didn't, I'm glad I was able to kind of shine some light on that and my personal experience over, 10, 20 years of, dealing with that and understanding that on my level and my personal experiences with it. But I hope this video helped you in understanding that and helped you understand why Oscar Health is a massive opportunity here, guys, in health insurance. And again, if you want to know more about Oscar and my bull thesis, you can definitely go check out my other videos. I'll link those down in the bio as well, so you guys can go check out all those different videos that I have on Oscar going over my bull thesis. And again, like this video if you like this content, hit the subscribe button. It's free if you want to get more content like this. And then if you want my high five algo, if you want to mess around with this and you know, use it yourself, I use it for investing now. I use it for trading. I use it for investing on the monthly chart, and I use it for trading on the weekly and then into the monthly chart as well. I'm rolling this out right now. I opened up 10 lifetime memberships for my community members, which those are all completely gone besides just one. There's only one left. There's only one left as of right now. So we have that, and then after that, I'll be opening it up to monthly and yearly subscriptions. If you want access to that, again, that'll be rolling out probably this week or next week. But I appreciate all of you guys either way. No matter if you join the High Five Collective, you come take up that 5-day free trial, or you just continue following me here, watching my videos, or not, whatever. It's all good. I appreciate you guys. Hope you have a great rest of your day. Hope you have a great rest of your week. And yeah, let's see what happens the rest of the week with this whole government shutdown thing. Catch you guys in the next one. See ya.